Well, late March marks the end of basketball and beginning of baseball, and it's also the time when many companies are busy assessing just how well financial results came in for the first quarter. Many companies are now reporting the negative impact of snow and ice in January and February. So is that an indicator of first quarter earnings releases? To provide perspective, our very own Jim Russell, U.S. Bank's senior equity strategist, joins Business Watch producer Kelly Leon in the studio. Jim and Kelly.
Thanks, Peg. Jim, welcome back. We missed you last week.
Good morning.
So those first quarter earnings will be coming out in a couple weeks.
Right.
What are some of the major themes that are emerging? What are you seeing?
You know, a couple of things are going to be negatives. Number one, as Peg mentioned a minute ago, the weather in January and February was very difficult for many businesses. Atlanta was shut down, Washington, D.C., Cleveland, we had trouble here in the tri-state area, other areas as well. Also, a strong U.S. dollar has been a negative, and I would also add residual economic weakness in some European countries. You know, I think in terms of economics, we're going to get a rebound, we think, in March. So the weather negative goes away. The strong dollar is likely to persist as a negative most of this year. And then third, we would tell you that we do think the economics in Europe will actually improve. So we do think that things are bouncing back. Now, we do think that earnings for the first quarter of 2014 are essentially going to be flat, 0% growth against the first quarter of last year. But one of the things we're really listening for as the companies come out and tell us about their first quarter results is a rebound in March and probably better trends in the second quarter. Hiring plans, which means jobs, we're very hopeful, of course, for that, and of course business spending. So we're kind of listening for some of those themes.
And we hear a lot about the large companies. What are the trends that we're seeing in the smaller companies? You
know, actually, this is a very interesting point. You know, with all the news around the Ukraine and some of the other things around Europe, it does appear, and there's a little bit of theme in the investment community, that the United States is maybe the very best place in the world to invest. And so we do have some trends for both medium-sized companies and small companies. You can see the earnings growth estimated for 2014, 7.6, pretty solid for the S&P 500. That's, of course, the big company list. The mid-cap, of course, are medium-sized companies, 22.7% earnings growth. That's very, very impressive for 2014. And the small companies, which are the most domestically focused, they do the most business in the United States, up 34.2%. So the more domestically focused, the more United States focused you are in terms of a company, it seems that the earnings growth is the most robust. So that's a pretty neat trend. So we're seeing a little bit faster earnings growth for the smaller companies.
Okay, and with the stock market being higher, are we seeing some new economic trends? Is it going to be outperform the stock market?
Yeah. You know, we get a question similar to that, Kelly, all the time, and isn't the stock market out over its ski tips? Isn't it well ahead of the economic trends? We fully recognize that Main Street hasn't fully participated in the economic rebound, and what you see here is the S&P 500 in red, and you see the earnings growth of the S&P earnings in blue, but you can see that basically they match each other, meaning that the stock market has gone up in line with earnings growth. So we don't feel that the stock market is all that expensive, but we do acknowledge that many parts of Main Street have not fully participated. So what we do think is that the stock market responds especially well to a not too hot, not too cold, but kind of a just right economic environment. And we do think that that has been in place, likely to be in place for most of this year.
All right, so hopefully we're looking at a good year ahead.
Yes, ma'am.
Jim, thanks so much. Thanks to U.S. Bank, and thanks to you for being here, as always.
Great to work with you.